Have you ever wondered how something small, like a bunch of bad home loans in just one country, can suddenly cause a massive global economic earthquake? I mean, what makes our whole financial system so connected and, honestly, so fragile? Well, we're going to dig into that right now. The best way to think about it is like a line of falling dominoes. Seriously, one tiny push, one domino tips over, and suddenly you've got this chain reaction that just tears through the entire system. That's the idea we're really going to unpack here. Contagion. Okay, so how do those dominoes even get lined up to begin with, right? To get that, we've got to look at the big picture, the structure of the entire global financial system itself. So at its core, global finance is just this huge, tangled web that connects everyone. We're talking about money, loans, investments, all zipping between countries 24/7. It links all of our economies together in a way that's, well, incredibly powerful, but also, as you can guess, really, really risky. And that's where the risk really kicks in. Because this giant, super complex system, it's powerful, yeah, but it's also surprisingly fragile. Think about it. If one little part of that web starts to shake, the whole thing starts to vibrate. That's exactly what we mean when we say the system loses balance. So when you hear financial crisis, don't think of it as just one single thing happening. Nope. It's almost always a chain reaction. A problem that starts small and local, like a housing market going bust, suddenly spreads through that whole network, dragging down other economies that looked totally stable just a minute before. Okay, so how does this whole chain reaction actually play out? I mean, it looks like pure chaos from the outside, but believe it or not, these crises, they often follow a pretty predictable pattern. So let's do it. Let's break down the anatomy of a meltdown. And for this, there's no better example than the 2008 global financial crisis. It's the perfect case study. What's so wild about it is that this massive global catastrophe all started with something that seemed, well, kind of local. Risky home loans, subprime mortgages in the United States. But here's the kicker. Those loans didn't stay in the US. They were bundled up, packaged, and sold to investors all over the world. And just like that, one little American domino was connected to the entire global line. So this whole thing usually happens in three stages. First, you have the boom. This is the party phase, right? Everyone's making money, confidence is through the roof, and nobody's thinking about risk. It feels like it's never going to end. Then, bam, reality hits. The bubble bursts, confidence just vanishes, people start panic selling, and prices for everything just fall off a cliff. And finally, stage three, the messy cleanup. This is the painful part. The economy shrinks, governments have to step in, and everyone slowly tries to rebuild. And you just hope some lessons were learned. And this quote just nails it perfectly. One country's mistake infected the world because money no longer had borders. That's the heart of it, isn't it? Money doesn't care about borders anymore. The very same technology that lets us invest anywhere in the world in a split second, well, it also lets a crisis spread just as fast. It turns one country's little mistake into a full-blown global infection. So, we've covered the what and the how, but if we really want to understand what's going on, we have to look past the numbers on a screen, beyond the charts and the spreadsheets. We need to talk about what's really driving all this chaos from behind the scenes. It's easy to think of finance as this clean, logical world of numbers and data, like it's all just math. But the reality is it's way, way messier. What's really pulling the strings is human psychology. It's our collective fear and our greed. And it's politics, too. The decisions people in power make that set the rules for everybody. And that's the big lesson here. At the end of the day, it's all about people. You can have the most sophisticated algorithms and all the data in the world, but markets are driven by us. It's our hopes, our fears, and, our totally irrational gut feelings that can take a system that looks perfectly balanced and turn it into a runaway train. So, all of this brings us right up to today, because even with everything we think we've learned from the past, there are some huge fundamental questions that are still just hanging out there, unanswered. And believe me, these are the questions that keep experts up at night. First up, just how safe is our money really? I mean, we've added a ton of new rules and regulations since 2008, but did we actually fix the deep underlying problems? Or did we just, put a Band-Aid on a huge crack? And then there's this one. How far can debt actually grow? We're talking governments, big companies, even regular people like us, borrowing more than ever before in history. You have to wonder, at what point does that whole tower of debt just get too wobbly to stand?
And finally, the big one, the one everyone wants to know. Where is the next crisis going to come from? Where will that first domino start to wobble? Is it going to be something we're all watching closely? Or is it going to come out of nowhere, from some blind spot that absolutely nobody is paying attention to?
Because that's the real takeaway here. Understanding finance isn't just about spreadsheets and making money. It's about understanding the world. Think of the global financial system as the nervous system of our planet. Learning how it works, and more importantly, how it breaks, isn't just some boring economic exercise. It's about getting a handle on this incredibly connected, fragile, and, yeah, deeply human world that we all live in together.